Hello and welcome to the latest Wealth of Advice market update recorded on the 5th of June 2024. Hell of a lot's happened since the last time we recorded a market update. The most obvious thing that we need to box off straight away is the fact that Rishi Sunak has finally called a general election. He surprised the whole of the country by calling that for the 4th of July. I think he surprised everyone within the Conservative Party as well, because clearly no one looked at the weather forecast that day. Why they didn't reuse the room inside 10 Downing Street that they broadcast from all the way through COVID is anyone's guess. But he was stood there getting soaked outside whilst the guy who normally stands outside Parliament, who has a million ASBOs against his name, was at the end of Downing Street playing the Labour anthem from 1997, saying things will only get better. Obviously, we're not here to give a party political broadcast, but it has to be said that markets are predicting a Labour win. Everyone you speak to is predicting a Labour win. The Conservatives are seeing more ministers stand down, more of the MPs stand down at this election, and some people are predicting that it could be as bad for them as what it was in 1997. You then see pictures which the Conservative Party themselves put out, the one there of Rishi stood under the exit sign on an aeroplane, which they said was there, Rishi going to get this country moving. He looks like he's trying to move things along there on the aeroplane, but it's obviously underneath an exit sign. And again, to keep things neutral, we've got this picture now of Keir Starmer. He was on the first live debate last night. From what I'm reading this morning, he wasn't coming through as really overwhelming, enthusiastic. He's got this tag of being quite boring. Why are we bothered about that? Well, it all comes down to what will the markets do after an election, and when, or as an election unfolds, what should we do? And the question we have is, should we invest more in the UK as a result of what goes on in the election? The chart that you can see on the screen shows the FTSE 100 annual returns going back to 1986, and my analysis of looking at that is it doesn't really matter who's in power right now, because our markets are governed by what goes on in global markets. The FTSE 100 is made up of mainly global companies who get around about 80% of their sales from outside of the UK. So what happens to those FTSE 100 companies is not really dependent on whether Rishi Sunak or Keir Starmer or the other guy, who I had to Google and look up this morning, the leader of the Liberals, Ed Davey. He could have walked in this office this morning, I wouldn't have a clue who he was. So maybe they won't have much of an influence. But whichever party's in power, they won't really affect the FTSE 100, it's believed. Big things that happen around the world will affect the FTSE 100. The global financial crisis of 2008 springs to mind, the dot-com bubble, which happened in 1999, just as I was entering this industry. I remember markets crashing because all the tech companies, their share prices collapsed massively. Obviously, the financial crisis 2008, then we've had COVID, then we've had the war in Ukraine, etc., etc. So a lot goes on in the world that affects the FTSE 100. The FTSE 250 are the next 250 largest companies in the UK stock market. They pretty much have a more domestic bias, more domestic oriented. They will have overseas sales, no question about that. And as you can see from this chart here, the average returns going back to 1986 again have been broadly similar under both parties. So if there is a question of which party would be best for markets, I don't think it really matters to an extent. We were at an investment event back in February, and the political guy who was speaking there, talking about what's happening in elections this year, he was predicting a major Labour victory, and he said Labour's got a lot of policies up their sleeve to try and get the country moving again, the country working again. And you're sitting there in the audience and you're saying, okay, but we'll believe it when we see it. We have the least amount invested in UK stocks across all the portfolios, whether it's the Wealth of Advice model portfolios, whether you look at what Prudential do, Legal & General, HSBC, Royal London. Everyone is investing less in the UK than what they were, say, 10, 15, 20 years ago. There are less big companies on the UK stock market compared to other markets around the world. So that's kind of one of the main reasons for that. Both parties, should they get elected, have committed not to raise income tax, corporation tax and national insurance. That would obviously inhibit major spending policies. I think Keir Starmer was getting asked these questions last night, and the Tories are saying, well, to meet what you're saying you're going to do, taxes will have to go up. And I don't believe he answered that question. But overall, both parties have acknowledged that they need to do something in respect of getting the NHS back online, getting education sorted out, getting the rail network sorted out, etc., etc. So it'll be interesting to see what they actually do. The overall fiscal target for the next Parliament term, so the next 5 years, is to bring government debt down by a decent percentage over the next 5 years as a percentage of GDP. So to try and bring government debt down, that's going to be very difficult, especially when we're in this environment of high interest rates. So speaking of interest rates, that brings us nicely on to the next part of the presentation when we're looking at what's been going on in markets over the last few weeks. May was generally a positive month for both equity and bond markets. I think if you were tracking performance quite closely, you're seeing the first half of the month was better than the second half. There is volatility still out there. We are seeing certain stocks and certain markets lunge up and down still on a daily basis. The US economy remains definitely in good shape, better than expected first quarter earnings. As a result of that, the Federal Reserve was intimating that inflation may stay higher for longer over there, which may have an impact on when they'll bring down interest rates. So I think those sorts of stories give markets a little bit of a wobble. So UK CPI fell to 2.3% in April, which was excellent from where it has been. As I say, if you have a look at the chart on the screen right now, you can see how it went way above 10%, but it's come right the way down. Obviously, people watching this will be saying and thinking, well, a lot of goods and items that I buy are still very expensive. CPI obviously is a basket of certain goods. UK services inflation is at 5.9%, and because parts of inflation are remaining higher than others, this expectation of a June interest rate cut by the Bank of England now seems premature. The Governor of the Bank of England, Andrew Bailey, said whilst they will remain politically independent, because obviously the Conservatives would love interest rates to come down just as we're going into a general election, he said they're only going to move interest rates when it's right for the economy. The US Federal Reserve guy is saying pretty much similar things. There was hope and expectation that the US would cut interest rates 3 or 4 times in 2024, probably by now. The weird thing about it, if you look at how markets shot up at the back end of last year, in November, December, that was all because they believed the US would start cutting interest rates aggressively, and we're entering the halfway point of the year, and that hasn't happened. European Central Bank is more confident about their economy, and wage price growth continue to be moderate across the board. So it's a bit of a mixed bag across the UK, Europe and US, but ultimately inflation is coming down, which is positive. As I say, we got down to that 2.3% figure in the UK. Companies are making good profits. Inflation, if you remember, in 2022 was all blamed on Ukraine war. Vladimir Putin was obviously getting mentioned quite a few times in Parliament. I remember the budgets that we had this year, his name was mentioned several times because of the invasion of Ukraine. We were going to see food prices go through the roof, etc., etc. If you saw this story a couple of weeks ago, this shows what Tesco's profits have just recently been announced as, 2.28 billion, which is up massively from where it was when it was 882 million the year before. But if you look at some of the products that are outlined on there, and lots of people watching this will relate to this. Inflation in many instances wasn't 10%, it's not down to 2.3%. For a lot of product and services that you use, inflation has been well above 15, 40% in some instances. The outcome of that right now, Tesco makes record profits, their share price will go up. All of the companies who provide the products that Tesco sells are charging more for their products, they're making more profit, stock markets will go up. So obviously it costs you more to live, it costs you more to put petrol in your car, it costs you more to heat the house. But the companies who are charging all of these prices will see more profits go in the future, and ultimately stock prices will go up, and that'll be healthy for markets. So we've now come through a long period of negative news stories. And yes, whilst I think companies like Tesco have taken the proverbial by putting the prices up as much as they did, and the food retailers and food manufacturers, put them both in that same bracket for doing that. Now we're through the end of it. What you're seeing is that the UK, with rising interest rates, with rising inflation, our economy didn't fall off a cliff. The World Bank suggested that the UK was going to have a huge recession and we're going to get into major problems. It never happened. The mortgage rate went really high. We didn't see housing repossessions. Yes, we might have saw a slowdown in the housing market, but we never saw the crash that was expected. So I think there was genuine reasons to feel positive about what the future may hold. Yes, we've got the UK election in the coming weeks, and we said earlier that won't normally have a major impact on what UK markets do. But I think once you get past the uncertainty of who's going to be in charge from July onwards, I think once that uncertainty is behind you, the market should genuinely calm down and be a bit more positive. We'll discuss the US and their situation with their upcoming election in a future update. But again, every fund manager was speaking to there said, don't be worried about what the outcome is necessarily. We should be feeling positive. The summer's about to start. We've just had what seems like 5 months of consecutive days of rain, and we're now entering a period where the sun's in the sky again, markets are up, and the client portfolios that we invest into, no matter what product that you have investments in right now, they are doing very well. So we now come to the end of the update where we talk about how markets have done. And thankfully, they're all in a nice position. If you look at main market indexes that we show year to date, so that's from January the 1st up until now, the S&P in America, the biggest market out there, is up 11.01%. MSCI World Index, so a basket of all the major indexes around the world put together, 9.5%. And the FTSE 100 languishing in third place, but by certainly no means a very disappointing score. Much better than what we get in the Eurovision, for example. We always bottom of that, but 8.87% is an attractive return so far. Obviously, the simplistic me will say, well, for halfway through the year almost, let's just double that and then give you some annual returns. Wouldn't that be fantastic if the FTSE's almost up 20% by the end of the year and the S&P is up well over 20%? Life isn't that simple. There'll obviously be some ups and downs along the way, but the general direction is good. When we look at market indexes over a full 12-month period, S&P up 21.8%. And again, if you look underneath the bonnet of where your investments are held, you will see there is more invested in the US than there was previously. UK FTSE 100 is up 12.86 and the MSCI up 19. Let's stretch these out over 5-year periods. As I say, that awful period of 2022, that awful few weeks of the COVID collapse, now just like disappears, if you like, into that long, bigger line. S&P over that five-year period is more than doubled. FTSE 100 up already 30.5. Obviously, so much has gone on in the UK over that 5-year period, not just obviously the COVID and the inflation bomb, but the actual Brexit situation, which is why UK markets, we believe, were a lot like unloved for a long period of time. That uncertainty what would happen after Brexit. And that's the other thing just to mention. I mean, with this update is sort of themed around the UK election. It will be very interesting to see, and I think very important to see what either political party does after the general election to try and make trade links back to all the major economies around the world better, bigger and stronger, so that I sound like a politician with those strap lines there, but hopefully get our country trading again and make the FTSE 100, the FTSE 250, the FTSE All-Share a more attractive place to invest. So we need a lot. We do need a political party, maybe with a magic wand, to come in to make everything right. Great. Whether that's done in one parliament term, I don't know, but hopefully, as I say, that this positivity that we're on now across all markets continues. Inflation comes down, interest rates start to come down in the US and in the UK in the next few months, and hopefully we'll have more of these positive market updates to come. So thanks for listening for another Wealth of Advice market update. If you have any queries or questions, please don't hesitate to get in touch through the normal means. And if you're having your annual review in the next few weeks, I look forward to seeing you. But if I don't, have a great summer, and I'll be back with an update in a few weeks' time.